Hi, I'm Anthony Parent, founder of IRS Medic and a tax attorney with more than 20 years of experience fixing tax problems for high net worth individuals and families in the US and around the world. Over the decades, I've been a guy that people call when the IRS comes knocking, and every week I post new content to help you stay ahead of the magical whims of the law. Subscribe so you don't miss anything. Most people assume the rich avoid taxes with secret offshore accounts or layers of shell companies. The truth is kind of different. First, the rich do any and all things from no plan at all to all-out blatant tax evasion. I've seen it all. So really what I'm talking about you today is the very real trust that sophisticated investors should consider using in order to avoid income taxes, gift taxes, and estate taxes, no matter where they live. This is the shelter I hope to set up for myself one day. So what is it? It's something called private placement life insurance, or PPLI for short. When it's structured correctly, a PPLI wrapper lets the wealthy get much wealthier by paying zero income taxes, zero gift taxes on transfers, zero estate tax at death, and pass massive portfolios to their heirs completely tax-free. Today, I'm going to show you exactly how it works, why it's 100% legal, and why it's realistically only available to families with $10 million or more to protect. Private placement life insurance is a customizable, institutional-grade life insurance policy that holds an individual's entire investment portfolio inside a tax-exempt insurance wrapper. Instead of your stocks, hedge funds, private equity, or real estate partnerships sitting in some brokerage account with limited investment choices that gets hit with estate tax or an LLC that triggers capital gains every time you rebalance, your investments sit inside this insurance chassis. The moment the assets go in, all investment gains become tax deferred and ultimately tax free. The death benefit is income tax free, and when ownership is structured properly, the policy is completely outside your taxable estate and exempt from gift tax. Investments inside the policy grow without any capital gains tax, any dividend tax, or any interest tax, no matter how aggressive the strategy. Unique personalized investments where all your know-how compound untouched over 30 or 40 years with no tax drag. The savings, the growth is enormous. The policy is owned by an irrevocable trust, often a non-grantor dynasty trust, so the full death benefit, including decades of growth, is outside your taxable estate. Your heirs receive every penny. Contributions to the policy are treated as insurance premiums, not outright gifts. Premium payments fall under very specific IRS exemptions that prevent gift tax triggers. This is not some gray area loophole I'm pitching. No. This is not something some internet influencer is going to tell you about either. This is a solid and, in a way, conservative plan. PPLI is fully disclosed, regulated, and reported to the IRS every year. It's boringly compliant, which is exactly why the IRS can't shut it down. Now, every few years, the IRS issues a warning about abusive insurance wrappers, and the headline screams huge scandal. But folks, in every tax shelter, there are people who claim it after the fact. They didn't do the compliance work, and then they needed to do, but they claim it anyway. Look, that's a big no-no, as the IRS never has problems finding people who didn't comply with the terms of a tax shelter. The IRS can always find people who take shortcuts, but you shouldn't let them discourage you from savings and structures you are entitled to under the law. Because the truth is that when the rules are followed, like investor control rules, diversification requirements, and proper trust ownership, PPLI is indisputably legal. I mean that. It is conservative. It is written directly into the Internal Revenue Code in Section 7702.817H and the estate tax exclusion for life insurance proceeds in Section 2042. Federal courts upheld these structures for decades. I first learned about PPLIs in 2006, and they were around a long time before I became an attorney. The IRS knows ultra-wealthy families save tens or hundreds of millions using PPLI. They just can't outlaw it without rewriting half the insurance and trust sections of the tax code. And Congress isn't about to do that, as the life insurance industry is a huge, powerful lobby in Washington, D.C. Do you know how we know that? Because life insurance proceeds are not taxable. Okay, so here's an important reality check. Why most people I talk to don't do this. PPLI makes sense only if you already have tens of millions of dollars, sometimes more, of investable assets, a large taxable investment portfolio generating significant gains, exposure to the 40% federal estate tax, and true multi-generational planning goals. Doesn't make sense if you're still in the wealth building phase, if your net worth is under it's around $5 million, if you're looking for a quick tax fix, this isn't it. The setup cost, legal fees, and minimum premiums are simply too high for anyone else. Here's how the structure works in plain English. You create an irrevocable trust, often a dynasty or asset protection trust in a friendly jurisdiction. The trust applies for and purchases a private placement life insurance policy from a major, highly rated carrier. You fund the policy with large premiums, either cash or in many cases, existing securities, sometimes highly appreciated. You transfer those in kind. Inside the policy, your private banker or family office investment manager allocates to hedge funds, private equity, direct deals, index funds, whatever fits your strategy. All growth compounds tax-free for the rest of your life. At death, the insurance carrier pays the trust a tax-free benefit equal to the policy's value or a multiple depending on the structure. The trust then distributes to your heirs with zero estate, gift, or income tax, and the assets can stay in the dynasty trust and keep growing for generations. Probate is skipped entirely. Regular dynasty trusts are powerful, but investments inside them are still subject to income tax. Grantor retained annuity trust, intentionally defected grantor trust, and charitable lead annuity trusts all require constant tuning and usually only eliminate some of the taxes. PPLI solves the entire tax triangle in one beautiful structure. Income tax becomes zero. Estate tax becomes zero. Gift tax becomes zero. It's the closest thing the tax code allows to a completely tax-free personal investment fund. So no, PPLI isn't magic, it isn't secrecy, but it also isn't easy. It takes an introduction to a team, and it's not right for people who don't like talking to lawyers, accountants, and wealth managers. Long discussions with tax attorneys isn't for everyone, if you could believe that. PPLI is something the industry doesn't want to even advertise that much. So you can tell I didn't even put it in the title of this video. And really, access is kind of geographically limited. You will tend to find those who can actually do this work are in Connecticut, New York, New Jersey, along with Miami, which is a fairly big hub, especially international. PPLI isn't even particularly complicated, but only once you become more familiar with how it works, as it is really simply using the tax code exactly as Congress wrote it, and some of the ultra wealthy have been doing it quietly for decades. So if you're in the $10 million plus range and serious about keeping your wealth in your family, instead of sending 40 to 50% or more to the government, this is the gold standard. Now, in our next video, we're going to pull the curtain back on the great wealth transfer. That's what's coming over the next 20 years, trillions moving from one generation to the next. And exactly how much the government gets, well, that's going to kind of depend on the mistakes that people make. So this video topic is the 5 top mistakes people make in estate planning, and it fits perfectly into everything we just covered about PPLI. Click on the video on the screen right now, and I'll see you there. I'm Anthony Parent with IRS Medic. Thanks for watching, and we'll talk soon.